Now, government has reversed the shortfall in the recent Treasury Bills Sale target by recording an 8.7% oversubscription in the latest auction. That's according to the Bank of Ghana's weekly sale. Charles Nixon has this update.
Importantly, government was able to mobilize enough money, in actual fact oversubscribing by 8%, and that's very important for the economy because in recent times, for the last 3 weeks, government has been failing to meet its target, but this time around it was able to do better in terms of the sale of the Treasury bills. Clearly, when it comes to the 91-day Treasury bills, the government was able to mobilize more than 950 million cedis at an interest rate of about 14.09%. With respect to the 182-day Treasury bill, which apparently is a 6-month bill, it was able to mobilize a little above 122 million cedis at an interest rate of about 14.14%. So you could tell that in terms of the yield or interest or the pricing on the instrument, it's within range. It hasn't really increased by a larger extent. It had only gone up by 100 basis points, which is about 0.1%. So it's good news for the country because there is a level of investor confidence in the economy when you are able to achieve your target, even it's being oversubscribed by a certain margin. So it sends positive signals to the investing public. And you know, government always have to go to the market to issue Treasury bill as part of mobilizing finance to finance the budget, as well as other capital projects which are very critical, i.e. hospitals, roads, and there's a need for government to float financial instruments to mobilize enough revenue to be able to finance some of these projects. So on a whole, we will say that the government did fairly well this time around. Perhaps investors are seeing the positive sentiment after the president was sworn in recently. There had been some level of improvement in the general business environment. So clearly going forward, we anticipate that government will be able to mobilize more of these short-term funds to be able to finance the budget. And it is very, very critical as far as we are concerned. We are hoping that interest rates on the instrument would go down, because when it does go down, it also have a rippling effect on cost of borrowing. And as businesses, as consumers who borrow from financial institutions, they want to see cost of credit or lending rates going down so that they'll be able to borrow with ease.